Hi, I'm Victor. I enjoy recording videos on companies that I invest in and sharing my investing journey on YouTube. I've benefited greatly from watching other investors on YouTube, and I wanted to provide my analysis on companies. Today's company that I am going to look at is Macy's. Macy's had their earnings today, and I'm able to update my analysis for this company. I scorecard all my investments and go through 4 questions followed by an action item. First, is it an industry I want to be in? Is the company operating and performing well? Is debt less than 3 times EBITDA? I want a discount on the stock. That way I can see my investment go up in value. Based on the answers to those questions, I decide whether I should buy, hold, or sell Macy's. Macy's is a very well-run retailer. When other retailers are failing, Macy's tends to really weather down periods well. And in growth periods, you see them really grow faster than their competitors. They also have a really good online business. It's a very old business. They've been around for more than 100 years. And this company, I believe, is one of the best run, especially premium retailers in the United States. Macy's reported earnings today, and they were very solid. In 2021, they had a great year. People were out shopping with all the stimulus dollars that were put into people's hands. They were able to go to Macy's and buy all the stuff they wanted to have. And what they did in 2022 was they basically repeated the revenue level of 2021. So that was a big, big accomplishment for them. Although growth from 2021 to 2022 is flat, I consider it a really good accomplishment. Other competitors like Kohl's saw their revenue really drop, but Macy's really held their revenue real high. Their credit card business is doing well. EBITDA is really strong. So the company did really well in 2022 overall. Taking a closer look at their income statement, again, their revenue was flat, which I believe is a very good accomplishment. Their profitability was good. Operating income was good. And net income was very good. So they were able to generate a really good profit. And as you'll see later, free cash flow. Also, keep in mind, they've been buying back shares. So they're reducing the number of shares that are out there for Macy's and making the percentage of ownership of each stockholder a little bit higher over time. So great job, Macy's. Looking at their balance sheet, their cash position did go down a little bit. But overall, the balance sheet's in good shape, especially since they are continuing to lower their long-term debt, bringing that balance down, which is a very good thing to see. Your statement of free cash flows was really good. It generated cash from operations, really good, healthy amount. It was lower than last year, but I think it was a very good number. And then their CapEx was $888 million. So overall, they produce good free cash flow, and I'll use that to value the company. I value companies by discounting the future free cash flows that I expect the company is going to produce. And in the case of Macy's, their free cash flow was $222 million. Therefore, I'm going to use that number as my starting point and go from there as I look into the future. I'm not going to grow cash flows. I'm going to be conservative and just say they're going to be a steady state business, which is a very conservative outlook. I'm going to discount free cash flows by 9%, which is a higher than average weighted average cost of capital. They have a good balance sheet, but they are in retail. And I think we're heading in a recession if we're not in a recession already. So I'd like a higher weighted average cost of capital. Based on those factors, the value of the company, according to my model, is 7.6 billion, but the current market cap is 5.5 billion. So therefore, it provides a 37% discount on the stock. Their balance sheet's in good health. It's under 3 times if you compare debt to EBITDA. So very good job, Macy's. And they pay a nice dividend, a yield of 3.2%. And they have a free cash flow yield of 13% if you compare free cash flow to their market cap. I think their performance in 2022 was really good. They kept their revenue flat following a very good year in 2021. They're paying a really nice dividend. They continue to rebuy shares. So they're really keeping or holding the investor in high regard over at Macy's. Profitable company with a PE of 4.2, real low PE. 2023, I'm expecting that the sales may decline single digit. They're going to be profitable, generate free cash, continue to buy back shares, and pay that really nice dividend. Overall, my outlook, I like holding this strong retailer. I believe they're stronger than their competitors, so they'll always outperform their competitors. Long term, I expect this company is going to grow and be a very profitable organization. Therefore, I think there's good upside in the stock, and they reward investors by paying that nice dividend. So let me scorecard Macy's. First, it's an industry that I want to be a part of. I'm always invested in retail because I think it's a really profitable industry if you buy the right companies. I own Macy's. I also own Big Five, which is a discount retailer. The company is, I argue, the best run premium retailer in the US. Their debt is less than 3 times EBITDA, and there's a good discount available on the stock. Therefore, I'm going to continue to buy shares in Macy's. Thank you for watching the video. I hope you found it interesting and discovered something new about Macy's. Keep in mind, I'm just sharing my investing journey. I make no recommendations to buy any stock or bond. Good luck investing in 2023.